Hello students, welcome back to Gratify Academy. Let us check out a sum related to cash flow analysis. This is in your textbook, which is illustration 3. Following are the summary balance sheet of Young India Limited. Now students, what you have to do when you prepare to do a sum, first you have to read the entire sum. That is the question right from the beginning till the end. You have to read the sum, and accordingly, what we do in the final accounts, we have to mark it out where the particular thing will go. Now, in cash flow analysis, there are two dates given here in the sum, 2017 and 2016. Okay, so 2016 is the opening balance sheet of this sum, and 2017 is the closing balance sheet, the opening date and the closing date. For example, fixed assets at the beginning of the year, opening of the year is 4 lakhs, that is opening fixed assets, and closing is 6 lakhs 50,000. This is how you have to check it out, the date first. Sometimes the date might be given 2016 and 2017. So however it is given, the earliest date will be the opening date and the latest date will be the closing date. These are the things given. We have fixed assets, we have debtors, opening and closing balances, stock, cash, and underwriting commission. I have already explained the format of the sum. This is the format where the activities are divided into three: cash flow from operating activity, then cash flow from investing activity, and cash flow from financial activity. Now, what you have to do? You have to mark it out where a particular thing will go. Now, like fixed assets. Fixed assets will go in investing activity. Okay, here is the fixed assets. Debtors are working capital, increase or decrease in working capital. Why? Because debtors, stock, cash, etc. are all current assets. So all current assets, increase and decrease in current assets as well as current liability, will be shown in working capital, increase or decrease in working capital, which we have here. Adjustment working capital changes. I will explain this format also. Then debtors goes in working capital, stock goes in working capital. Cash you need not put in working capital because we have to show the opening and closing balances of cash at the end of the sum as per the format. Underwriting commission will be amortization, which goes in operating activity. Then comes share capital, which is financing activity. General reserves will go in operating expenditure or operating activity. Profit and loss, the opening and the closing, is the starting point of your operating activity. 14% debentures will go in your financing activity or fixed assets, but here you will have to open a debenture account. I will tell you why. Now, below some adjustments are given. Assuming the depreciation for the year to be 50,000 and interim dividend paid during the year to be 5% on opening capital, prepare cash flow statement. You can say cash flow analysis or you can say cash flow statement. So two adjustments are given. One is depreciation, which is related to fixed assets. So I put a tick here on fixed assets. And then you have dividend, interim dividend, that you have to show in your statement. Now, first you have to prepare the entire format. Leave the space accordingly and write all the headings. And the adjustment related to fixed assets. So we will open a small fixed assets account so that we can show the adjustments here. Okay. Then again you have in adjustment for interim dividend. So you can open an interim dividend account. Means what? The thing which includes an adjustment, you have to open a small ledger account for that. But interim dividend need not be opened because we don't have interim dividend opening or closing balance. We have only adjustment, right? So that we can do directly in our cash flow statement or cash flow analysis. Now, your first activity, that is cash flow from operating activity, is again divided into three parts. Adjustment of non-cash item. This is adjust. Adjust means adjustment. Adjustment of non-cash item, adjustment of cash flow from investing or financing activity. This adjustment of cash flow from investing or financing activity is not the main head investing and financing activity. This is subdivided. I mean, the operating activities are subdivided into this part where only the adjustment relating to investing and financing activity will be shown. Then comes adjustment of working capital changes. These three parts are the parts of your operating activity. So when we make the operating activity, you have to make the operating activity in three sections. But the thing is, if you have a particular thing in that head, for example, adjustment of non-cash item. The first, operating activity. Cash flow from operating activity are divided into three sections. First is adjustment of non-cash item. What do we show here? Here it is non-cash. Non-cash means those items which are imaginary, right? That is not practically done, like depreciation. The amount of depreciation is imaginary. We have to show in the books, but depreciation is not a particular expense or income which we have to deduct in the books. I mean, practically it is not there, it is imaginary. So depreciation, amortization, underwriting commission return off and transfer to reserves are all non-cash item which you have to show under the head of adjustments of non-cash item. B, it is adjustment of cash flow from investing or financing activity. This includes investments in financing activity, uh, adjustments related to investing or financing activity. Those are interim dividend, interest expenses, dividend income, dividend paid, loss on sale of assets or investments, and profit on sale of assets and investment. So you have to be very careful here. Interim dividend are added. It is added. Matlab it is to be shown as positive. Interest expenses, positive. Interim dividend are paid by the company. Okay. Interest expenses are borne by the company. So these are the expenses which are to be added. Okay. Remember that you don't have to deduct, you have to add. And those which the company receives, like dividend income, is to be deducted. Dividend paid are to be added. If it is a loss on sale of assets and investments, it is to be added. And if it is profit on sale of investments and assets, it is to be deducted. Okay. Now here we have to see the flow of the money, the flow of the money. So expenses are to be added and incomes are to be deducted. Then comes adjustment of working capital changes. Here you will not take cash and bank balance. This part you will have to learn very properly. Like if there is decrease in current asset, decrease or increase means what? We will compare the opening and the closing balances of the current asset. So either it will be increase or it will be a decrease. If it is a decrease in current assets, you will have to add. If it is increase in current liability, you have to add. So decrease in current asset, increase in current liability are to be added. Increase in current assets and decrease in current liabilities are to be deducted. You have to understand this very properly. Add decrease in current assets and add increase in current liability. Deduct increase in current assets and deduct decrease in current liability. This will give you the changes in working capital. Then A, B, and C are to be shown here. You have to add that, which will give you the actual cash generated from operating activities. This complete thing is only the first part of your cash flow. That is cash flow from operating activity. Okay. Now, here is the format for the sum. Cash flow from operating activity. We will fill in all the items here. We will add, then we will take the cash flow from investing activity and cash flow from financing activity. Okay. Now let us start with the sum. This is the question. Fixed assets, right? Fixed assets are like, if we purchase assets, it is investments. So because it has adjustment, we have opened the account here. So fixed assets are to be opened. So opening balance of assets on the debit side, to opening balance brought down. Opening is 4 lakhs. Put the amount 4 lakhs. Closing of the fixed assets are always shown on the credit side below. By balance carried down, amount is 6,50,000. And now item wise, you will go and show the opening and closing. Now debtors, opening is 2 lakhs and closing is 3,50,000. Okay. Now you can see opening is 2 lakh, closing is 3,50,000. There is an increase of 1,50,000. ओपनिंग में 2 lakhs था, क्लोजिंग में 3,50,000 है, दोनों का डिफरेंस है 1,50,000. End of the year, if it is 3,50,000, which means 1,50,000 has been increased. This is increase in current asset. Okay, to be shown in your working capital here. Increase in debtors, because it is increase, because it is an increase, you will deduct, right? So you will write minus increase in debtors. increase in debtors. The difference in the amount is 1,50,000, and the negative item, yani the things which you are deducting, should always be shown in a bracket so that we can minus that from the actual amount. Then stock opening is 1,50,000, closing is 2,50,000. There is an increase in 1 lakh, and stock also is a current asset, so we'll show in working capital, and it is increased, so you will deduct. Increase in stock 1 lakh. Okay. Then cash opening and cash closing. You don't have any other current asset, so we can bring this in the second column. 1,50,000 and 1 lakh is 2,50,000, but it is in negative, so you put a bracket in that. Minus 2,50,000. Okay. Next is opening cash balance. You can look at the format here. Here it is, whatever the amount you get, the net increase in cash or net decrease. If it is negative, it is decrease. If the final answer is positive, it will be increase. To that, you have to add opening cash and bank balance. So I'll write the opening balance here, and the opening cash balance is 1 lakh. Okay. And the closing cash balance is 1,30,000, which will be your final answer. Remember that. Put your 1,30,000. Now, when you're doing your sum, when your sum is completed, and if you get the answer 1,30,000 finally, which means your sum is correct, you have to bring the answer right correct to your closing balance of cash and bank. Okay, so your closing cash and bank is 1,30,000. This is your final answer. When we solve the entire sum, the answer should be 1,30,000. Coming to next item, underwriting commission. Underwriting commission, in the opening it is 70,000, and closing it is nil, which means the amortization. Underwriting commission comes under the head of amortization in your operating activity. All the things where you have to post, you have to learn that, students. So here, adjustment of non-cash item. Now, non-cash item means depreciation, amortization, etc. So you write here amortization, and in the bracket you can write underwriting commission written off. Okay, and the amount, difference in the amount is 70,000. If you have more than one item in particular head, put in the first column. If you do not have any item in that particular head, you can put directly in the second column and add all that. Now this is 70,000, which is shown in the first column. Amortization 70,000. Now comes the liability side. We are finished with our assets. Share capital. Share capital opening is 6 lakhs and closing is 7 lakh, which means during the year company has issued more shares worth rupees 1 lakh. Okay, difference is 1 lakh. So what you will do here, the company has issued more equity shares worth rupees 1 lakh. So this will come under the head of financial activity, cash flow from financial activity. Here you will write issue of equity shares, 1 lakh in the second column. Then comes general reserve. General reserves are shown in operating activity under the head of adjustment for non-cash item. 1,50,000, say it has become 2 lakhs, right? So the difference is 50,000. 50,000 has been increased. So you'll show in your adjustment of non-cash, right? Transfer to general reserve. We have transferred from our profits to general reserve an amount of 50,000 during the year. That is why it has become 2 lakhs. Transfer to general reserves. Okay. So transfer to general reserves is 50,000, the difference in the amount, and we don't have any adjustment for that. Now, profit and loss opening is 1,70,000 and closing is 2,80,000, right? Now, if it is more, which means it is a profit. How much? The difference. Difference is 1,10,000. So here, net profit you have written in the cash flow from operating activity, the starting point, net profit. What you will write? The bigger amount first, 2,80,000. From that, deduct the smaller amount, 1,70,000. The difference in the profit is 1,10,000. Bring in your outer column. Second column. 1,10,000. This is the profit gained in this year, current year. In the beginning, it was 1,70,000. So you have gained profit of 1,10,000 during this year, in the year 2017, and then the profit has become 2,80,000. So what is the difference? That is 1,10,000. The next item is 14% debentures issued for purchase of fixed assets. Now here what we'll do to make it more simpler, I will open a 14% debenture account, also a small account. You can do it directly, but to make you understand properly, we can make a ledger account here, 14% debenture account. The opening balance of liability always comes on the credit side. So you will write here by opening balance of debentures, 14% debentures, which is nil, by opening balance brought down. You don't have any opening balance of debentures, so just put a dash here. And the closing balance is 2 lakhs. So down on the debit side, you will write 2 balance carried down 2 lakhs. Done. So debentures are also posted from your given balance sheet. Now, adjustment number 1, assuming the depreciation for the year to be 50,000, you have 50,000 depreciation. Okay. So first effect, depreciation are always shown in the particular ledger account on the credit side by depreciation account. Amount is 50,000. Because it is an adjustment, you will have to show 2 times, 2 effects. The second effect will be shown in your depreciation in non-cash item here. So here depreciation on fixed asset, and the amount is 50,000. So 2 effects for the adjustments are shown. 1, fixed assets account credit side by depreciation. Second, cash flow from operating activity. In that, the first head, non-cash item, depreciation on fixed assets, 50,000. Now, the second adjustment is related to interim dividend paid during the year to be 5% on opening capital. Now, what will be 5% on opening capital? Opening capital is 6 lakhs and 5% of 6 lakhs is 30,000. That you will show in your operating activity, second head, adjustment of cash flow from investing or financing activity. Under this, you will write interim dividend paid, interim dividend paid, 30,000 in the middle column, 30,000. Okay. And the second effect for this will be in cash flow from financial activity. This. Here you will write interim dividend. Interim dividend paid, right? Paid, so it will be 30,000, which is to be deducted. So here money going out means minus, coming in means plus. Okay. So this is 1,30,000. 30,000 have to be deducted. So 2 effects for interim dividend is 1 in cash flow from financing activity, 30,000, and the second, adjustment of cash flow from investing and financing activity. In that, interim dividend paid is 30,000. So students, you have to make it clear in the first head, cash flow from operating activity, whatever money comes in, okay, whatever money comes in are to be deducted, and whatever is going out, which is paid, are to be added. Please remember that. Why? Because this head is related to operating activity. Now, what do we mean by operating activity? Operating activity means the things which are done in the current year itself. जैसे हम प्रॉफिट एंड लॉस अकाउंट बनाते हैं तो करंट ईयर का ऑल द एक्सपेंडिचर. So from the gross profit, when I deduct the expenses, I get the net profit, right? So when we have the net profit, we have to go in reverse format. Net profit is given here already. We have the net profit. So what you will do, if you are starting with net profit, you will add expenditure and deduct income. Okay, like gross profit, plus income, isn't it? The normal final accounts, if we have gross profit on the credits or P&L account, we add the income received in that year and then we deduct the expenditure, we get net profit. But when we are starting with net profit, you have to go in a reverse format, like you have to add the expenses and deduct the income. That is why when we have a net profit here, we are adding the expenditure and we are deducting the incomes. Please remember that here in the operating activity. And the working capital changes, you have the format. If you have a decrease in the current asset, you have to, I'm so sorry, if you're having increase in current asset, you have to reduce that. And then you have to follow the format. Okay. So here everything is done. Now what we need to do is close the statement. While closing the statement, you have your ledger account that is to be closed first. Okay. So first I will close my 14% debentures. Why? Because debentures are related to your fixed assets, right? That is investing activity. So I will close this. Debit side is 2 lakh and you have a balance of 2 lakhs on the credit side of your debenture account. The debit and the credit should be equal. Now, this 2 lakh, the balancing figure will be transferred to fixed assets and investment account. Our debentures, the company's debentures are the investments. So these are fixed assets and investment account. So from here, from the debenture, you will transfer it to your debit side of fixed assets account. That is to 14% debenture account. Okay, so first you have to close all your working, the adjustments ledger account. This is 20,000. Sorry, 2 lakhs. Now close your fixed assets account. This is 6 lakhs 50 and 57 lakh, and this is less. So 7 lakh. 7 lakh minus 6 lakhs, it is 1 lakh. And this 1 lakh will be shown to your, you will write here to cash and bank, but this is actually to be shown in your cash flow statement or cash analysis, 1 lakh. Okay. This 1 lakh will be shown in your cash flow statement under the head of cash flow from investing activities, right? Debentures are your investment. So here we are writing purchase of fixed assets because we have shown the account, because we have opened a ledger account. So you will write here working note number 1. This will be checked 1. Okay, and the amount 1 lakh. When we are purchasing fixed assets, the cash will go out, right? So here you will show your 1 lakh. Because it is going out, this is your cash going out, so it is 1 lakh in negative. But then you have to deduct that. Then we have closed over this. Now we come to our closure of cash flow statement. This is 1 lakh. Now adjustment of non-cash items 70,000, 50,000, 50,000. This gives you 1 lakh 70,000, right? 1 lakh 70,000. Adjustment cash flow from investing or financing activities 30,000. Now A, B, and C. Add this together. This is 1, 2, 80, 3 lakh 10,000. 3 lakh 10,000. From this 3 lakh 10,000, you will deduct 2 lakh 50,000. The third part is negative. So what you get is 60,000 when A, B, and C are to be added. A plus B plus C gives us net cash from operating activity, which is 60,000. Now, 60,000 minus 1 lakh, the total of this is financing activity is 70,000. So, 60,000 plus 70,000, 1 lakh 30, 1 lakh 30 minus 1 lakh. Okay, so this is 60, this is minus 1 lakh. Okay, now 30 and 70. 40. Correct. So this is 70,000. Now when I add this 1, 2, and 3, 1, 60,000, 2, minus 1 lakh and 370,000 gives me 30,000 positive. Positive means net increase in cash 30,000. Okay, to that I have added opening cash balance 1 lakh, and 1 lakh and 30,000 gives me 1 lakh 30,000, which is your closing balance in your question. So if you get the same amount after preparing the statement, if you get the same amount, which means your answer is correct. So students, this is how you prepare a cash flow statement by following a simple format. But remember, practice is a must. If you practice, then only you will be able to do in such a manner. Now, thanks for watching my video. Please like, share, and subscribe, and do not forget to comment. Thank you so much.